Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, it's been a little while since I've done a video, so I promised my members I was going to do a video before the market opens this week. Today is Sunday, let's see, August 21st. It is about 2 p.m. Here in Texas, so it's about 3 hours before the market opens for the week on the futures. Okay, hang on a second, let me get a little sip of coffee. Went to church this morning, and a lot of you don't realize it. I mentioned in the Discord server. By the way, if you want to become a member, there's a join button right below this video. Click it. I think it's $5.99. I haven't checked the price, but I haven't raised the prices. I was going to, but I decided not to. So you're still getting it at a really dirt cheap price. But $5.99 for the membership. You get access to the Discord server. And, of course, I share my opinion about what I think the markets are going to do and so on and so forth. Got a pretty good group of guys and gals on there, so if you want to join, you can. I try to do videos, a couple times a month. Just depends what's going on, but it's been pretty good. In this video, I'll show a position I got going on right now in the S&P 500 futures. Really nice position. Yeah, I'll talk about that briefly. But anyway, this morning I went to church. And a lot of you don't realize it, but I sing. That's right. So I had to do a few songs this morning in church, and I really enjoyed it. Had a great time at church this morning. So I'm back to do the video here for the members. I think I'll put this video out public for everybody, so everybody can get kind of an example of what I share with my members from time to time. Okay. So anyway, let's look at the S&P 500 here. This is the September contracts. Okay. I do have a position right now, but I have it for the December contracts because this expiration is coming up here pretty soon for September. So if you're going to trade the futures, just be careful to not trade. In my opinion, don't trade the September unless you're just going to hold it for like maybe a week or two or a day or two or whatever. I think this expires like second week of September or something. So you really need to watch your expirations on the futures. Okay. So anyway, excuse me. Let's take a look and see what's going on here. So I've been watching this cycle, this big one right here. And there's some smaller cycles kind of overlaying here, just particularly this yellow one, which is matching up pretty well with that big green one. Okay, let's talk about this cycle right here. This cycle runs from July 13th out to September 11th. 9/11. We all know 9/11, right? So 9/11. For my international friends, we do it a little weird in the United States. Of course, we think it's normal. This is the month, and this is the day. Okay. So September 11th is right there. So for those not familiar with cycle analysis, basically we're just watching price movement, and for the S&P 500, it tends to be very cyclical. So I won't dive too deep into cycle analysis, but we're making use of cycles, okay, to help us time the market. So you can see back over here, it's been going up ever since the middle of July. It's been on a pretty good run here. And this top trend line here, this one I'm looking at here, that's from the weekly chart. So it hit that about 3-4 trading days ago. Let's see, August 16th, it hit that and ran into some serious resistance. And I noticed, and we'll talk about these indicators, but I started getting some signals that were really starting to strongly suggest the market was going to pull back, which now it has already begun. So we had these signals back here, okay? We got these two divergence signals in all this chop. Let me clear the screen here. In this like 8 or 9 days of chop. And I thought maybe the market would pull back here, but it didn't. And I really should have known better that it wasn't going to, because the certainty rate was pretty quiet. We only had this 1 day right here. But everything else was flatline. Look at that. Just flat for geez. That's got to be 2.5, 3 weeks of just flat. Almost no data coming in on the certainty rate. I'll talk about this in a minute. I did take a position back here, kind of caught me out. I lost a little bit of money here in a trade right here. I had 3, maybe 4 or 5 micro contracts, and but that's trading. You know, I put in my risk management, close the position, and that's just the way it goes. You know, you just move on to the next trade. But then it got some legs underneath it and continued on, and then we got these divergent warnings again. This time they're yellow. I don't know if you can see it in the video, but these over here are white, and these are yellow. When you start seeing yellow and red, especially in the Big Daddy, yeah, that's pretty significant. Look at it back here. And then the market started taking a pretty big dive. And, of course, we got confirmation on the SMI, which means the Stochastic Momentum Index. The Big Daddy is my own indicator. For those that don't know, this is a predictive type of indicator. Okay, so I use all these indicators that you see on the screen here. This is the MACD at the top. We'll talk about that in a moment. But I use all these in conjunction, right? I don't just look at one indicator. I use cycle analysis with other indicators, and all of it collectively helps me to set up trades, okay? So the certainty rate, this basically measures the flow of, this is going to sound weird for those who don't know, but this measures the flow of plasma, which comes into the solar system and interacts with the sun, and the sun interacts with the earth, and this is a measurement of plasma or positive ions. Okay, without getting too deep into the subject matter, this is measuring plasma that comes in basically from the sun to the earth. Okay, and there's a little bit of some simple logic in here that's keeping track of what's going on. So some of you that know me and you've been following my content for a while, or you're a member, you've heard all this before, okay? For those that are new, this sounds like, okay, you're scratching your head, what the heck is this guy talking about? So, yeah, we do use data, off-Earth data, that helps time the market. Oh my gosh, that can't possibly be true. This guy's crazy. Okay, but I'm not crazy. And it is often a huge confirmation. Now, I don't always get it right, because it's hard to always get it perfectly right. Like I said back here, I got caught out with this little bump and took a bad trade. But like I said, that's part of trading. You just try to mitigate those trades, keep them small, keep your losses small, and move on. Okay, but this one was different. We had some really solid divergence warnings going on. The MACD, now I'll talk about the MACD, was really getting very toppy. Look at these numbers over here, 86 and 82. Well, they were up at like 91. And I don't remember, this one was like 83 maybe or something. So those are, I just know historically, those are really big numbers, okay? When I start seeing the MACD up in these kind of numbers, which was back here somewhere, like back on these days. I start seeing that going on, yeah, I'm starting to pay attention. Get divergence warnings on both the Big Daddy, the forecastive indicator, the SMI, Stochastic Momentum Index, and then lo and behold, we start getting a cluster of data coming in for I call it the certainty rate, which I swore I was going to change the name of this, but now it is what it is. I'm going to keep that name. But we started getting plasma data coming in, and it was just started clustering. Look at all this data right here. So let me clear the screen. I'll hover my mouse over some of these candlesticks at the top. But I want you to pay attention to this number right over here. This number. I'm going to circle it. Okay. So just pay attention to that. So let's go back and find out. Oops, sorry. Banging into the microphone here. Let's see. Back here. So it looks like on, August 12th, you'll notice down there the certainty rate was 8.1. Now, for some of you that doesn't mean anything, and I get it. Okay, it doesn't mean anything to you, but just to kind of give you a heads up, right now I have a filter. The filters that has what I call a minimum filter. If it's 8 or higher, then it'll make its way onto this indicator you're seeing at the bottom. Okay, if it's lower than 8, then I don't let it. It just flat lines at the bottom as 0. Okay, and that may be adjusted in the future, but for now we're going to keep it at 8. Okay, so anyway, back there on August 12th, this 8.1 came in, and I thought to myself, okay, that's good, but I learned my lesson. Because this is a fairly new indicator. I've only been using it for maybe a couple months. So I'm still kind of learning and feeling out this indicator. So like I said, I got caught out back there on August 4th. Kind of caught me out with all this sideways chop. So I was a little more patient this time. And you got an 8.1 there on August 12th, but then the next day we got an 8.8. Now those aren't big numbers, 8.8, but the key here is that we got two in a row or in close proximity to each other, right? So I started seeing a cluster of data coming in. And then the next day, excuse me, was a 0. I'm like, okay, I'm not doing anything yet. I was watching the MACD. I was watching the Big Daddy with the divergence was starting to pop up. SMI had divergence popping up. They were both starting to look like they're getting like they wanted to roll over, but they hadn't rolled over yet. And then this one really was the one that kind of helped me solidify taking a position. You look down there, the certainty rate was 10.6 on August 17th. Now, why did I take a position? Well, because collectively all this data is just screaming at me to take a position, right? Look at the stochastic, the MACD. Look at these numbers right here. I want you to pay attention to these numbers. Look at that, 92 and 78. Now let's see, let me go back one day. Yeah, 92 and 74. Okay. So these numbers are here, 92 the next day with 92 and 81. But these numbers are pretty big numbers, especially when you get in the 90s and 80. You start seeing 90 and 80 together like that. But on this day it was 92 and 78, so it was pretty close to 80. So the MACD I know is looking very peaky. Now it can peak sometimes like that and just track sideways for a long time, so you got to be careful. So I don't just look at one indicator like I said before, okay? But I noticed the MACD was looking very peaky. I'm like, okay, that's good. That's a good indication the market's getting exhausted. And then down to Big Daddy, the next indicator down, I already had 2 yellow dots there for divergence warnings. Now this kind of, my divergence logic on this indicator is, white means we got some divergence, yellow means, okay, it's getting serious, and red is getting really serious, okay, for divergence. So the yellow divergence warnings were like really standing out to me. I'm like, okay, I had 2 yellow divergence warnings recently. That's great. Okay. Plus the Big Daddy was starting to point down. The SMI, the next one below that, on August 17th, we're still here. Hang with me on this. It's still on August 17th. The SMI was starting to roll over a little bit, and it also had yellow divergence warnings. Okay, so those collectively are looking really juicy for a short side trade. But as I say here in Texas, the nail in the coffin was when that 10.6 came in. I was like, okay, that's it. I'm convinced short side trade. Because remember, we had two 8s, an 8.1, an 8.8 on that certainty rate, then a 0, and then a 10.6. So what I'm really saying here is all these indicators collectively were really starting to shine, right? And these few days right in here, collectively, the data was starting to mount that was really giving me a lot of confidence that there's a short side trade coming. So I took a trade right here, right there on August 17th, if I remember right. Yeah, that candlestick. I took it after the close of the intraday market. Oh, got a phone call. Hold on a second. It's my mom. Okay, back from my mom. Sunday, we're all busy here in Texas Sunday. That's how church folks are. Sunday's a busy day. All right. So I took a trade there because I was convinced August 17th looked really good, okay? So I have a trade right now. Let me switch over to it and I'll show you real quick. We're going to finish up this video because I got my mom's coming over. I got stuff I got to do. So let me finish up this video, okay? Let's go take a look at the trade. Just real brief, guys and gals, I think we're going to come down into, this is August 29th right here, just briefly for those that want to know. That's one cycle low, and then there's another one here on September 11th, okay? And I think the market's going to come down pretty hard. How far down? I think we'll get down into the 4100s. It might even go lower. So I have a position right now, and I'm probably going to close the position if it hits mid 4100s. I'll probably get out and take my profit, okay? So that's my opinion about where that's going and what I would do, okay? So let's take a brief look at my position, and then we'll finish up this video. Okay, there it is. You can see my my position right now is about $1,837 in the green. Okay, remember I said I took this is December contracts, by the way. That's why the symbol looks a little bit different. Okay, December contracts for the futures. I took a trade right there after the market closed because futures trade almost 24 hours a day, 7 days, 5 days a week. And so I've been writing this down right here, right? I'm going to let this position continue This is an E-mini, not a micro. So this is equivalent to 10 E-micro contracts. All right. So that's what's going on there. And I'm going to let this position continue to mature. Right now, you can see I have a 41.40. Okay. That's where I'm just, and I may move it. I just kind of stuck it in there for now. So you can see I got in at 4283 and 3/4, and I'm looking to probably close this position around 41.40. That is easily subject to change. I mean, I don't like setting numbers, guys and gals. I just put that in there, just to have something in there. I'm not really a numbers person necessarily. I like to watch what the market's doing and get a feel for when the market's going to get exhausted. Okay, I don't do that to myself and say, oh, it's got to hit this, otherwise I'm not getting out. I don't do that because I think it's a dangerous way to trade. I just trade the market based on the cycles. Okay. All right, there you go, guys. I'm up $1,837.50. Don't plan on closing this position. This is a swing trade. It's not. I don't do a lot of intraday trade stuff. I do mostly swing trades. I think the market's going to come down. It's going to continue to roll over. I think it's going to come down, probably at least get down to this 41, mid 4100s. It may even go lower. Remember, this is December contract, so the numbers are a little bit different than the current contract. But on this contract, you can see the 50-day moving average, which is a pretty significant number, is at 39.86. And I think we'll probably I think we'll get down to 4,100 maybe even a little bit lower than that. Okay, I know some of you like me follow Slim, and he's a pretty cool guy. I do my own cycle analysis. I don't like to copy what he's doing, but I do my own cycle analysis, and I compare it with him just to see if we're on. And it looks like the cycles are pretty much spot on. We're both really, really close within a day or two. So that's good confirmation for me. I feel like the cycles are really spot on. There you go, guys and gals. Remember, if you aren't already a member, subscribe to the YouTube channel first, because you got to do that first. Okay, give me a thumbs up while you're at it. Appreciate that. And then click the join button below the video. You'll get these kind of videos. You get on the Discord server. You get my opinion about trading. I don't give financial advice because obviously I'm not allowed to do that, but I do give my opinion. You heard it right here. This is all opinion. Hope you all having a blessed Sunday. Talk to you all real soon again next time.